Welcome to Market Recap Live. I am your host, Joseph Martin, and thank God it's, wait a minute, Wednesday. That's not even on here. Something's up, guys. Something's up. Something's up. Here we go already. And I'm looking at it. Wow. Okay, what was going on, guys? I was going to be late. I was going to be late tonight. Something is going on with my system. Okay, so because of that, I'm about to go ahead and sip my tea and relax. I didn't want to start late tonight, so I just went ahead and started the stream without checking to see what was going on with this stuff. So we about to fix this right now in real time. I hope you guys had an awesome day. You spent some time in the market and saw some gains instead of some losses. It was really active. I think we got a new 52-week high with the SPY. I think I didn't check it, but I seen a lot of stuff in the information technology sector go up. So what I'm doing now, I'm checking my Elgato prompter, because it was some words missing, guys. I don't know what's going on. I ain't never seen this before. It's like Murphy's Law. Anything that can happen will happen. And that's exactly what's going on. How you got a prompter and the words missing? Like, I'm literally looking at it and everything is over there, but it's not showing up in the prompter. Yeah, it's really not showing up in there. And I have no idea why some of these words are missing. So I'm going to reset this. Thank you for tuning in. We dealing with some technical difficulties, but just hang with me. I appreciate you showing up tonight. There it is. Okay. So in task. Yeah, you should be used to it now if you've been tuning in. We always got something going on. Yeah, guys, it's lagging. It's a nasty lag going on right now. So let me see if this fixes the issue. And then we can get this party going. It hasn't launched yet. It hasn't launched yet. Let me try a different way. There we go. Okay, we might be in business. Give me a second. Sip my tea and just relax. Hit that like button for me. I would appreciate it. There you go. That was strange. That was strange. It's some type of weird spacing going on the while it's doing this. But we got it. So let's just go ahead and go. Welcome to Market Recap Live. I am your host, Joseph Martin, and thank God it's Wednesday. You know I'm thanking God the way the show started off, for real, for real. All right, tonight we're taking a look at ticker WBD. You might know them better as Warner Brothers Discovery. Warner Brothers Discovery Incorporated was founded in 2022 by David Zaslav, with the first headquarters opening in New York, New York. Now they are publicly traded on the NASDAQ and have a market value over $60 billion. Oh my goodness. Warner Brothers Discovery is in the entertainment industry and the communication services sector, and they are listed in the S&P 500 index. Some of Warner Brothers Discovery Incorporated's competitors are Netflix, ticker NFLX, Comcast, ticker CMCSA, and Walt Disney, ticker DIS. We're going to review Warner Brothers Discovery Incorporated's earnings, their website, and visit the charts to perform a quick technical analysis. But before we do that, let's do our roll call and check our stream poll. We are streaming live on YouTube and Facebook. Let's get this chat going and tell us where you're tuning in from. Put a YT in the chat if you're tuning in from YouTube, and put an FB in the chat if you're tuning in from Facebook. While you guys are filling up the stream and the chat, here's the mission statement. We are building a community over here for people who want to take control of their financial situation by learning how to unlock the wealth building power of the stock market. And we are streaming Monday through Friday following trading sessions at 11 p.m. Eastern time. The U.S. stock market regular trading hours are 9:30 a.m. to 4 p.m. Eastern time. And there's a link for the New York Stock Exchange calendar down in the description. Okay, let's get to it. And I see I have a chat. So let me get this chat. Facebook, hey, what's up, sis? So you just saw me crashing at the beginning of the stream. Appreciate the chat. Appreciate the chat. Let's get to it. I figured it out, at least for right now. So here we go. Let's go to the earnings. Earnings. Put that back. I don't have this up. There we go. There's the website. Here we go. Earnings. Bam. There we go. Okay. Warner Brothers Discovery Incorporated, ticker symbol WBD, the $67.5 billion company reported its first quarter earnings today. They have a 52-week high of $30, which took place on December 12th, and a 52-week low of $8.06 that occurred on May 8th, which is a trading range of $21.94. And it closed today at $27.20. Warner Brothers Discovery Incorporated earnings report missed on the top line, reporting revenue of $8.89 billion, which was lower than the market expectations of $8.91 billion, and missed on the bottom line as a $2.8 billion Netflix termination fee offset strong streaming and studios growth. EPS was lower than the analysts and market expectations of -9 cents. Okay, negative. So this is one of the first times we've had this on the live stream. Their EPS is negative. When they reported an adjusted EPS of -$1.17. Warner Brothers Discovery Incorporated reported a GAAP net loss of $2.9 billion, which was higher than the $453 million net loss they reported this same quarter last year. This represents an increase of 540.2%. There should be a decrease. Oh, wait a minute. I'm confused. They done lost so much money. I'm confused. Let's just move on. Let's get past that one. So for the first fiscal quarter of 2025, their net loss was approximately 84.4% lower than it is compared to now a year later. Right. So it's an increase. Their losses are 540% higher than the previous year. Makes sense. Got it. The earnings were released after the market closed, followed by a 4:30 p.m. Eastern time conference call. As far as guidance, management expects their acquisition of Paramount to close in the third quarter. That 52-week high compared to today's closing of $27.20 represents a decline of a 9.3% over a span of approximately 5 months. So if someone invested $1,000 in December at that 52-week high of $30, they would be seeing a loss of $93.33. All right. Now, there was something that we just talked about right here that I need to look at. Okay, that's the wrong ticker. So let's put this up here. So this is what's going on. Warner Brothers is being purchased by Paramount. They're not purchasing Paramount. They're being purchased by Paramount. Right. So as far as guidance, management expects their acquisition by Paramount to close in the third quarter. So I hope you got that in the earnings. I want to make sure that that was clear. And this is not the ticker that needs to be on the screen. This is the ticker that needs to be on the screen. Okay. All right. So Warner Brothers is being purchased by Paramount, ticker PSKY. All right. So I want to make sure I cleared that up because I fumbled the bag a few times through the earnings. So let's move on. Here we go. Company websites and descriptions. Let's talk about why we visit these company websites. We're looking at the visuals and text to find answers to these key questions. What goods and or services does the company sell? How important are those goods and services to their customers? What makes this company stand out from the competition? And how well do they take care of their employees? To find those answers, we browse 4 key areas: the homepage for the goods and or services, about us for purpose, vision, and mission statements, careers for employee benefits and opportunities, investor relations for SEC filings and stock quotes. And for your convenience, all the companies featured in tonight's live stream are down in the description. Now let's go back to Warner Brothers Discovery's Incorporated's website to check that out. And we're gonna smooth this show up a little bit because I've been, woo, boy, that boy crashing tonight. And I'm seeing we got the wrong ticker up there, so let's fix that. All right, that's fixed. Are we zoomed in? Let's zoom in. All right, we on 150. So let me also explain to you guys why I'm a little nervous tonight, okay? My glasses is dirty. When I don't start on time, something throw me off. It's like everything just fall apart from there. So let me tell you something while I'm cleaning my filthy glasses. I had a hoodie on. I had lint all over my head. It looked like a Velcro head when, I don't know. My hair is growing faster now that I'm going bald. And then the lint from my hoodie, it looked like I had cotton all over my head. So I'm like, man, I got to shave. So I hurried up and did that. That took some time. Then we get the live stream going. It was only like 2 minutes to launch the live stream. Got the script together and all of that. And then my prompter malfunctioned, right? So then I'm on YouTube and I found out some good news. And I'll be doggone, that made me nervous when that added to my nervousness when the prompter was messing up, because now YouTube is actually promoting my content on the YouTube homepage. So in the analytics, they'll tell you how people are finding your content. Are they finding it in the search? Are they finding it? They tell you how people are finding your content. So the number one way people are finding my content right now is on the YouTube homepage. That's a big deal. That's a big accomplishment, because now YouTube is putting it in people's face. And I'll be doggone right after I find that out. As soon as I start my live stream tonight, I'm like, oh, wait a minute, it ain't working. Hold on. Wait a minute. So that made me a little nervous, but we messed up so much from failing forward. This is the best way to learn, guys. This is why I call my interview Losses Lead to Wins. It's times like this when you make mistakes and roll with the punches that you can figure it out on the fly and keep your cool, breathe a little bit, sip your tea. Whatever was going to happen, it didn't happen. Now just start working your way through it and just keep going. And sometimes just be honest, tell people what's going on. So that's what I wanted to do with that. So let's get to this. So we're looking at, look, sis, you should feel better watching what I'm doing tonight. So, hey, my sister says she ain't feeling good, guys. So give her some prayers and all that other good stuff so she can feel better, so she can tackle her busy day tomorrow. Yeah, brother, just go ahead. Brother just trying to figure it out and move on. You know what I'm saying? All right, so we got the Warner Brothers website up here. Let's scroll over the homepage. Now, remember, we're going to look at the About Us. I'm all away from the microphone. We're going to look at the About Us, our values. I see careers here and investor relations. Let me put the ticker back on the screen. There we go. So I'm going to scroll over this homepage and see if I can see anything else that jumps out at me. Man. They got HBO, HBO Max, Warner Brothers, Discovery. Okay, Discovery Plus. Man, Paramount is going to be a powerhouse after purchasing them. Imagine all of that under one company. Like when we were talking about Meta owning Facebook and Instagram, which they own more than that. But just think, so Paramount, Skydance, now is going to own Warner Brothers, Discovery, HBO Max. That's crazy. So yeah, everything we need to see from what I saw is right at the top. So we have our values. Let's just go over there. Guiding principles. Thank you for tuning in. I see somebody else peeked in this live stream. Consider subscribing and hit that like button. I definitely would appreciate it. If you leave a comment, I'll give you a shout out on the screen too. So Warner Brothers Discovery, our guiding principles. At WBD, we create the world's greatest content across film, television, sports, news, and games. The links for the websites are down in the description for your convenience if you want to browse over it, because it's talking about exploring, and we'll be all day, and we ain't got all night. Act as one team, trust each other, succeed together, and grow together. Okay. This is a lot of stuff going on. Where is the purpose, the vision, the mission? We appreciate you taking the time to get to know us and what makes us who we are. Well, you're welcome. How about you tell us what your values is and stop making me dig through this website like this? Okay, I like the fact that we see brands. I don't know how I jumped over that. So let's go to our brands. Okay, so HBO Max, HBO, we talked about that. We talked about that. So CNN, TBS. Now remember, all of these are going to be under Paramount now. Once the acquisition finalizes, I think they said in the third quarter during the earnings announcements that I had gave. Wow, Cartoon Network, all of this stuff is going to be all up under Paramount. Man. And Netflix was in a bidding war. They were trying to get it. So all of this would have been on Netflix, guys. And politics had got involved somehow. Like they didn't want it. It was weird. There was a lot of stuff going on. You'll be surprised how much politics have to do with money. Like people think politics have to do with people. Nah, got to do with money. You need to follow the money. Because they was like, no, you can't. It was a lot of different. Just look it up. Just look it up. All right. So we looked at the brands. Let's go to careers. And now that we're in careers, I wonder if they zoomed us out. Let me see. Zoom in. Yeah, they zoomed us out. Man, I hate when they do that. We switch to a different page. They throw the whole thing off. Okay, so I see search jobs, our values. Here go the cookie thing. Oh my gosh, just allow. I don't even feel like going through the thing. Get it off the screen. Cookie. Beware of recruitment scams. Man, that's crazy. I done seen this on a few websites. Like, how do you scam somebody with a job? Like, how does that happen? How do you scam somebody with a job? Like, yeah, we gonna hire you. Come on. How do you scam a job? People be scamming everything. This is wild. So our company, Warner Brothers Discovery, is a premier global media and entertainment company offering audiences the world's most differentiated and complete portfolio of content, brands, and franchises across television, film, sports, news, streaming, and gaming. Okay. Explore Warner Brothers Discovery. So they have videos on here if you want to watch them. Remember, the links for these websites are down in the description for your convenience. All right, since we under careers, where are the benefits at? Where are the benefits? What you pay? What you offering these employees? Because I ain't see nothing about benefits. So let's click some of this and see what we have here. Search jobs, no. Our values, we just looked at that. Podcast, events, early talent. Know what? I don't see it. Join talent community. I didn't see anything when we scrolled through this for benefits. So let's move on. I'm not going to drag this out tonight. We ain't doing that. Nope. We ain't doing that no more. All right. Nope. We won't have to go all the way back to the home page. There it is. So up here, investor relations. Let's go there. Boom. Did they zoom us out? Let's check real quick. Yep, they did it again. Dirty. All right, investors relations page. We're going to scroll over this page. What we're looking for, we want the stock quote, and we want to see what charts and investment tools they have on the website, if any. So here's the stock quote. It says it plain as day right here. So can we click on this and do anything more than what view all stock information? Let's do that. All right, that's what we're looking for. The stock quote that look like this. So they trade on the NASDAQ. We know what the ticker is, the WBD. We had that on the screen. Here's the stock chart that they offer on their website. And here are some other investment tools. So we've navigated through the website to see what we can find together. So let's go ahead and move on to this right here. Move on down. Before we take a look at the charts, remember, professionals trade from a computer, not a mobile device. Mobile trading apps are limited. Traders lose critical detail and advanced platform features on a mobile screen. So keep in mind, trading from a phone is usually the least effective way for managing assets. To see every detail, use a full trading platform and watch these streams on a computer or a TV. Only use a phone as a last resort. Now let's look at the charts for ticker WBD. Warner Brothers. Let's go over there. Here we go. Bam. Bam. We got Thinkorswim pulled up. Yeah. All right. And we have everything we need on the screen. Nope. Here's the right ticker. There we are. Bam. Okay. So we have Warner Brothers pulled up on the chart already. And guys, remember, they're being acquired by Paramount. So I noticed when I looked at these charts today, the price action on this stock seems pretty flat. Okay, that's the immediate thing that I saw. So this area right here of running up. So we're looking at a 1 year daily chart. I didn't mention that. We're looking at a 1 year daily chart. And for some reason, this isn't over like we normally have it. So let's fix this in the settings, appearance. Nope, equities. Nope, nope, nope. Time axis right here. This should be on 30. I don't know why it's where it's at. So remember how we talked about recently, we're getting a little deeper with the technical analysis about consolidation. This is a long period of consolidation right here. You know what? I can do this a little bit better. So let me use this area right here. Okay. Now, what I mean by consolidation is this price has been trading in this range very tight for about 1, 2, 3, 4, 5, about 5 months. And that's because they've been having acquisition talks. That was with Netflix and Paramount. So because of that, the stock price isn't really fluctuating. So I don't know if you remember, but Twitter used to be a publicly traded company. You could invest in Twitter before it got purchased by Elon Musk. So I don't know what the terms are with this one, but I believe with Twitter, each shareholder was given a specific amount of money per share as part of the acquisition or the buyout, because they ended up just buying the company and taking it where it wasn't public anymore. So when he did that, based on the amount of shares you had, you would get that specific dollar amount for each share when Twitter was purchased by Elon Musk. So because of the uncertainty and possibly like a fixed amount, like they know that this is around the area that a payout could possibly be, that's why the stock price isn't really fluctuating. So we're not going to do any real technicals on this because this company isn't even going to be publicly traded through this ticker soon once the acquisition fully takes place. Okay, so that's my take on this one. But we can just look at what happened over the last 10 years. So this is a 10-year weekly chart, and we can see that they started to kind of recover right here in 2025. So that's around March. But this is a long period of like a consolidation right here. So like all in 2024 was kind of moving sideways around that $10 price point. And then in 2025, it broke out of that $10 price point and started to come up, went past 20, and then it got like around the 30. What's that, around 28? I would say like around 28. So it flattened out like around the 28, a little bit more, a little bit less, but that was the consolidation around that point. So this is still the earnings company. So let's pull up the floating data box and get the stock quote for this. And we're going to zoom in because that's very small. So right here, here's the stock for it. This is the candle for today. And this box is crazy. So let me take this off. It's hurting my eyes. So Warner Brothers Discovery opened today at $27.16. They had a high of $27.37. They had a low of $27.10, and they closed today at $27.20, which was a trading range of 26 cents. You hear how tight that trading range is? That's what I'm talking about. It barely moved, guys, for a whole trading session. And today was earnings. So, if you've been following the live streams, trading volume goes up on earnings. We usually see wild price action happen and increased trading on earnings. And today was not that. Because when we look at the volume, they traded 21 million shares of this stock today. Okay. Whoop-de-doo, right? So let's take the floating data box off. And I want to show you what I'm talking about. Now, if I take me off the screen, we're going to look at what they trade on average. So on average, Warner Brothers trades 44 million shares in a trading session. That's on average. Today, they did less than half. They did less than half that because they only did the 21. So their volume sucked today. And even before earnings, it was only 16. So it seems like trading volume has decreased dramatically below average since the acquisition is being processed and finalized and processed. I can put me back on the screen. So because of that, volume is it's not there. It doesn't seem like this is being heavily traded anymore. So when we look at the volume rank percentile, it's only 18.3%, which means out of the most recent 252 trading days, today's volume is only higher than 18.3% of those days. And if you want to be specific about the days below, so only 46 days had lower volume than today out of the most recent 252 trading days. That's what that means. So yeah, that's wild. But we can move on. We done. That's some country stuff, boy. We done. Let's move on. I don't know what's going on with me tonight. This is wild. But let's go. Let's keep it going. Now, back to the community. I would appreciate it very much if you guys share the stream, hit the like button, subscribe. And if you wish to send a monetary gift to support the content, I'd appreciate the way things been going tonight. Cash App and PayPal links are down in the description as well as on the ticker on the screen. Now, let's look at what the S&P 500 index did today by using the SPY ETF. This ETF gives investors an opportunity to participate in the broader U.S. market by allowing them to own a percentage of each company in the S&P 500 index. All right. And earlier in the show, I'm like, I think they had a 52-week high. I ain't even checked yet. So we about to see this together. So let's go back here. We can take Warner Brothers off the screen and replace that with the SPY because that's what we about to do. And right over here in the symbol box, we're going to type in ticker SPY to pull up this ETF. And boom, guys, oh my gosh, it did make another high. This thing just going to the moon. Man, let's zoom in. This is just, whoo, this is wild, man. And it gapped up. It's just climbing and climbing and climbing. So we drew this price level as resistance. We said it needed to get above the $725.04 yesterday. And it teased the zone like it act like it didn't want to go through it yesterday. It was a lie. It was a flat out lie. So now we can remove this zone. I mean, that we're going to leave a zone, but we're going to put that new 52-week high they just made as resistance now. So that $734.59 is resistance. And they almost didn't even come off that. There's a very small wick at the top of this candle. They also call it a shadow. So I've been getting back into my reading, and they also call that a shadow. It's not just called a wick. So it's different terms, but I'm about to start using more of them because I'm getting back into my reading, because I read those books years ago and I'm like, man, I need to sharpen up on my stuff, because we doing this technical analysis and these certain patterns, I don't remember the names of them. So I'm getting back into my books, and I'll be sharing with you guys what those books are soon. All right. So we don't really have to do no technicals with the SPY. We are going to do the quote, and we're going to talk about the volume, because like I said, we don't really need to do much with this unless you just haven't seen it. We can go back to the 10-year weekly. There's no historical highs above this. We're hitting all-time highs. When you have historical data that's higher than where you are right now, my neck on this t-shirt is crazy. You can go back and look at historical levels to see if you're going to run into some type of resistance from what you've seen historically. These are all-time highs. So that's why we don't really look at the 10-year weekly when we look at the SPY. But I just want to tell you why we don't really look at it now. We know that this is an all-time highs territory, okay? So it's trading above the 9-day simple moving average. That's what this dashed green line is. And this dashed white line is the 200-day simple moving average. So those are going to be studies. If you don't know what those are studies. Down here, these are indicators, okay? All right, now let's get the ETF quote, because this is not a stock, and get this floating data box up and go over this. All right. So the SPY opened today at $728.16. And they had a high of $734.59. They had a low of $727.82. And they closed today at $733.83, which was a trading range of $6.77. Now, notice how this range is a lot larger than what we seen with Warner Brothers. It was like 26 cents. It was tight. This is a lot wider. Even though this is a higher stock, I just want you to keep that in mind as we review the companies tonight, that the range is going to be wider than that tight range we saw on Warner Brothers. Okay, now when we look at the trading volume, we've already been noticing that the SPY is going up on lower than average volume, which we're going to discuss again. So the volume for today was 53 million shares of this ETF was traded today. Now, when we go and look what they normally do on average, and take the floating data box off, we can see that the average trading volume for this ETF is 75 million in a daily trading session. And 53 is definitely below that. And Tuesday, it was 36 million. So the volume is increasing as the price is going up now, but it's still trading below average volume of what they usually get in a daily session. All right, that's what we're looking at when we factor in volume. Now, when we look the volume rank percentile, this tells us how crazy it is. Out of the most recent 252 trading days, only 27 days had lower volume than today. So now when we look at the volume rank percentile, 10.7 days had lower volume than today. Only 10.7% of those. And when you get the specific number, that was 27 days. So this is extremely low volume compared to what the SPY usually get, and it's still making all-time highs. Now, here's what I didn't cover when we were talking about the technicals, just in case you don't know what this is. I said it gapped up, but I didn't really break that down, just in case this is your first time or whatever. This wick or the shadow, this bottom one, let me put a line there, and the high of the previous day. This area, let me just make a box. This area right here is going to be referred to as and I'm gonna use a color so it'll stand out. That area is going to be referred to as a gap. There was no normal trading session price activity in that area. The price just gapped between away from the whole price action of yesterday to the price action of today. So that space in between is called a gap or a window. So that was part of the technicals that I did not cover. So I wanted to make sure I gave you that before we moved on. But we are done, so we can go right here. Now, let's look at today's winners and losers. First, we're going to take a look at the loser so we can end the night on a high note. And I have a treat for you guys, so I appreciate you for being here and tuning in, because I'm going to do my best to hold back my tears, because one of the companies we are going to cover tonight, whoo boy, I lost a lot of money on this trade, and I'm going to fill you in on what I did, what I learned, what I could do better, et cetera, et cetera. But man, oh man, oh man, you're gonna wanna be here for this. So let's go ahead and move on. Let's go to the loser, so we can take SPY off. Now we're gonna go right over here to Market Watch. Okay. And we have the S&P 500 watch list pulled up, and right here is the biggest loser for today, which I accidentally had on the screen earlier. But the biggest loser is CDW Corporation, and they lost 20.3% today. And that's a big loss, guys. Oh, that's a big boy. That's a big boy. And they are in, we're going to say we're going to say that later. Yesterday, they closed at $136.80, and today they closed at $109. So that 20.32% loss. Let's pull up a calculator. Hey guys, thanks for tuning in. Hit that like button. Consider subscribing, and if you leave a comment, I'll give you a shout out on the screen. So right here with that 20.3% loss, I'm gonna show you what that would look like. So if somebody invested $1,000 at that previous closing price and got that 20.32% loss, we will multiply the 1,000 times 20.32, hit the percentage, it'll convert it to a decimal and hit equal. So they would have lost $203.20 of their $1,000 investment. We negate it, then we add the $1,000 back to it, which would be our principal, and it'll show how much money they would be left with. So they would be left with $796.80 of their initial investment capital, their principal, from suffering that 20.32% loss. Ooh-wee. It just, I have a hard time saying it. It just, it's so bad. So anyway, let's go over here to analyze. We hit that analyze tab so we can get a better look at this company. This company, ticker CDW, is in the information technology sector. So this is something else I want to teach you guys real quick. When we're looking right here at these biggest losers, here's a quick little tip to save you some time. Right here in the sectors, check to see if the losers happen to be in the same sector. That means that that sector possibly is having issues or problems. So now that I've told you that, when you glance over this area, we can see that the biggest losers for today are in the healthcare and information technology sector. You see that? Not this first one. I don't know what's going on with this first one because it has NA on it and it's been stuck at the top. I think it's probably going to be removed from the S&P 500. So not the one that says NA, but this one. So this one, information technology, healthcare, information technology, healthcare. So 1, 2, 3, 4, 5, 6. So the 6 biggest losers for today were all in the healthcare and information technology. So that's a little tip. All right, now we accidentally clicked the wrong company. Let's go back to CDW, go back to analyze. So we looked at information technology. Now when we go to CDW Corporation, let me take me off the screen. Bam. All right, so here's their website. Remember, the websites are down in the description for your convenience. Now let's read a little bit about the description. CDW Corporation provides information technology, IT solutions in the United States, the United Kingdom, and Canada. It operates through 3 segments: commercial, government, and education. All right, so let's go to their website. Bam. There we go. And then we do this and we put me back on the screen after that loads. There we go. All right. So let's zoom in so this will be easier to see. Now, remember, just a reminder of what we're looking for. We're going to browse over the home page, giving you the game plan. We're going to browse over the home page. We're going to look for the about, the careers, investor relations, and anything else we can find after going over the home. Right. So a home page, about us, we're looking for the purpose, vision, mission statement, and all that other stuff. So let me glance over the top. No, I don't see anything at the top. So we're going to scroll through it. So AMD. Now we know AMD is a publicly traded company and they going crazy right now. So CDW might be somehow connected to AMD. So that would be something that we need to research. Explore popular products, so laptop, printers, monitors, networking, desktop software, digital workspace that works for everyone. So they mentioning Google. Yeah, we need to find out why this stock dropped too. Tap into our network of partners. LG, Xerox, Acer, Microsoft. CDW helps you govern Microsoft Fabric so teams move faster and unlock real AI value. You need to look into this company for real, for real. I'm talking about myself. I need to look into this. I'm going to dig deeper into this after the live stream. So here we go. About us, careers, investors, relations. And it might give some information on why work with us. But let's just go with about us. Let's see what we can find there first before we start looking at anything else. About us, get to know CDW. All right, now this will give us some details. CDW Corporation is a leading multi-brand provider of information technology solutions to business, government, education, and healthcare customers in the United States. Bam, did you hear that? I'm telling you, doing this research. Listen, they were the biggest loser. Remember how we talked about the sectors? It was information technology and healthcare. Listen to this again. CDW Corporation is a leading multi-brand provider of information technology solutions to business, government, education, and healthcare customers. Those are the two sectors, information technology and healthcare, that were part of the biggest losers cluster tonight. Okay. So annual net sales, the number of customers, they have over 250,000 customers. Almost 15,000 coworkers. So they talk about their story, their leadership, social impact. Okay, so what I'm going to do to get a little bit more details about this company, let's go to why work with us. Is that what this is? That says our story. I'm going to look at both of these. I'm interested. So let's go here. Remember, the links for the websites are down in the description for your convenience if you want to look at this on your own time. So they talk about the history, not really interested in that. Let's go to values. What we value at CDW, everything we do revolves around meeting the needs of our customers. Here's how we continue to be a great company for our coworkers and our customers. Man, I love this. This makes it real easy. What we value and our purpose. So we know this is the purpose. CDW's purpose is to make technology work so people can do great things. Man, look at all these different things around the customer they work on. They work on marketing, legal. So this is a different type of data I think they provide. Our code. They got a lot of different stuff that they got their hands in from what I'm seeing. Okay. Now we looked at this. This was why work with us, I believe. Wasn't it? No, we didn't click that one yet. So here we go. Why work with us? Create an account today. Get IT advice for tomorrow. How it works. Man, where are the benefits? This is why work with us. This ain't even the career section. I'm like, where the benefits? So scroll through here. And yeah, I don't see nothing really jumps out at me. So let's go to careers and get to the benefits. Where are the benefits? Zoom in. There we go. 150. Is that 150? I think I probably moved it. There it is. There's 150. All right. Amazing happens when talent thrives, making amazing happen. Make amazing happen. Search jobs by region. So they're in Canada, USA, EMEA. I know that's Africa, but I'm guessing that includes all this other stuff up there too. Who we are, where are the benefits? Search all jobs. I don't see it. I don't see it. I don't see it. Maybe we can click on something. Any drop downs? Nope, don't see it. I'm ready to move on. So let's go to investors relations. Don't want to drag this out. If we don't see it, let's keep it moving. Don't want to slow the show down. This is still that. So we got to back it up, back it up, back it up, back it up. One more time. I believe that was it. I backed it up. Here it is. All right. Investor relations. And of course, it opens it up on a different screen. So let me bring this over so you can see it. Zoom in, blow this back up before I mess something up over here. And we're at the investors relations. We're almost done with this so we can go on with the biggest loser and I can give you my story. It's almost story time. Man, reject these cookies. I don't need all this. Are we zoomed in how we need to be? Yeah. All right. So investor relations. They trade on the NASDAQ, ticker CDW. $109. Corporate overview. We're going to scroll this home page right here. Well, not home. Yeah, the home page of the investor relations. Now, news, events, stock info right there. So we see stock quote, dividend history. So this company pays dividends. We'll verify that on the Thinkorswim charts and analyst coverage. So let's go to stock quote. Here's the stock quote information. Here's the chart that they offer on their website. Here's the other investment tools. Okay, so we're done. You notice how the stock quote, the stock charts that they have available on these websites tend to look similar. I think they might be using the same program to put that stuff up. They look similar to me. Ooh, that red candle, nasty. This company been coming down for a minute. So we looking at, let's put this right. Let's put the right disclaimer up here. We are looking at a 1 year daily chart. Okay. So we know what we're looking at. And this thing has been on a downtrend all year, pretty much. We see that it went up to test the 200-day simple moving average, the dashed white line. And it's basically been staying under that line the whole year. Okay. So as far as support and resistance, eyeballing this, I'm going to say this is a zone right here. Let me be tight with that. So boom, I'm going to say that's a resistance zone because the price is below it. So since the price is below it, this zone is going to be resistance, support and resistance. I'm going to show you why I use that and where I got it from. When it came down, these three candles, remember they're daily candles. These three candles found support on this zone because they recovered, came up, came back down and fell in it and kind of got caught in that zone. Okay. Came out, and you can see the tails or the wicks pop out, but they couldn't stay out. They came right back to that zone. Then this is kind of like what we've been discussing. Consolidation is trending sideways, but it was able to make it out, but it was just tiptoeing on top of that zone, fell right back into the consolidation and then fell out of that zone, right? And as it fell out, it came right back up, tested the zone, couldn't get through it, and then it came right back out. So I'm talking you through what I'm seeing so you can see the reason I drew that as a support and resistance. It came right back up to that zone and it fell again. Came up under it. It didn't even make it back to test it. And then they had earnings today and boom. They had a huge sell-off today. Huge sell-off. The way this fell, this way this candle came down. And it gapped down up here. So the gap was between yesterday and today. So here's the gap that we talked about earlier. So we see another one. So the low of yesterday was $134.79. And the high for today was $128.35. Now, remember when I had drew the example of the gap previously and we made it yellow so it was easy to see. So maybe that'd be nice to start doing that so you can see what I mean about as far as like the gap ups and gap downs. So as you can see, there's no trading activity in that yellow area as far as between the most recent trading sessions, which was today and yesterday. Okay. So that's our technicals that we see from that. This, we didn't look at the 10. Let's go look at the 10-year weekly to see what we can find. So this is what I mean by like having historical data. So because this isn't all-time highs, like the $263, so I'm talking fast, one mouth, whole bunch of thoughts coming through my head. Let me slow down. The highest this stock has been price-wise in the last 10 years was $263.37. If I take me off the screen, you'll see the lowest it's been in 10 years was $38.89. So once upon a time in CDW Corporation, the stock was trending up. And this is a 10-year weekly chart. And this dash white line is a 200-week simple moving average because we're looking at a weekly chart. So it was able to hold above the trend, above this simple moving average, this 200-day simple moving average on the weekly chart. It was able to hold above it. But once it fell through here, it came back and tested it, this long tail or this long wick. And then once it fell back below it, it has not been able to get back above this 200-week simple moving average. So like when we were looking at put me back on the screen, the SPY ETF, when we were looking at the SPY, we don't have any historical data to the left that we could use as price points for the high because it's making all-time highs. That's what would have happened here. But since it's starting to come down, now we can use price levels from the left to determine what's going on. Now, remember, we didn't look at the whole 10-year weekly when we drew this right here, right? So what we're going to do, I'm going to open this up. I'm going to edit the properties, and I'm going to take it further back so we can see what that support resistance zone looks like when it crosses the historical data. So let's go back. I'm going to take it back to 2017 because I know that's enough. So the 1st of 2017, click OK, boom, it extended. See, let me take me off the screen so you can see it. See, we drew it right over here and we could see that it was respecting those price levels when we were just looking at a weekly chart. I mean, the daily chart. So this is the 1-year daily chart. This is where we first drew the zone at. Remember when I walked you through it? Now, when we went back and looked at the historical data and extended it to the left, we can see that it's been tested before over the years. It was tested here when it came down. It didn't quite touch it here, but it came down to it with that tail, with that wick. And then over here, it broke through it. It tested it here and it tested it here. So this isn't really anything new. We can see that this has been respected as support and resistance zone for years by looking at that 10-year weekly chart. Okay. I just wanted to make sure I showed you that. So now here we can see when we put the line here, let me go back to the 1-year daily so you can see what I'm doing. I'm going to zoom in. We're going to put this line at the bottom of the low for today. Put me on the screen so you can see me because I'm teaching now, boy. All right. So the low of today was $106. We put this line at the low. Now, when we go to the 10-year weekly chart, we can see clear as day right here in this area that candle right here. You see, right, this one is the one I'm talking about. That wick came right down to that level again. Over here, you see how the price is wrapped around that support resistance zone? This is why technical analysis is so powerful. Because if you really look at the charts, you can see that certain price levels companies come back to and they respect. So it can kind of give people an idea of how they should position their trades or investments when these price levels are reached again or surpassed or stuff like that. But the technicals, yeah, It's definitely a skill to be able, it's a beneficial skill to learn this. So let's go to the 1 year daily chart, and we can talk about this stock quote because we went over the technicals for a minute. This got me excited because it was a lot of stuff we could go over with this. But let's go ahead and get this floating data box back up and talk about this huge sell-off candle we see. Okay, so CDW Corporation opened today at $127.50. They had a high of $128.35 and a low of $106, and they closed at $109, which was a trading range of $22.35. Remember, I told you to keep your eyes on these ranges. So when we look at Warner Brothers, it was only a few cents. And this one is dollars in the range. Okay. So we can definitely tell that there was some movement here, some volatility. Now, volume. They traded 6 million shares of this stock today. So we need to find out what is their average volume that they usually get. And they had earnings today, guys. So this goes with the earnings idea we talked about. We're starting to see that the biggest losers and the biggest winners happen to be on days that they announce earnings. They have a lot of trading volume that comes in on earnings, unlike what we just saw with Warner Brothers, but that's because of the acquisition that's coming up. So we found out why, or determined why that was the case with that one. So the average trading volume for this stock is right here. They usually trade 1.4 million shares in a trading session. And today they did 6.3 million. So that's definitely above average. And yesterday, on Tuesday, it was double what they usually get. Or just about double of what they usually get. So the volume increased, which was expected because today was actually earnings. When did they announce it? It had to be before the market or during market hours in order for it to react like this. Yeah, it was before the market. And they're using Central Time, so Eastern Time, that would be 7 a.m. So they announced this at 7 a.m. Eastern Time. So that's why the market reacted to it today, because it was announced before the market opened. Now, when we look at the volume rate percentile, excuse me, I need some tea. It's cold now, but at least my mouth ain't dry. Out of the most recent 252 trading days, only one day had higher volume than today when it came to this stock. The volume rate percentile is 99.6%. So today's volume was higher than 99.6% of the 252 trading days, the most recent ones. So that's what that means. So that's wild. All right, now I can get to my story and we can get to the biggest winner for today. Another great teaching moment for you guys. So let's go back to the Market Watch tab. We can take the loser off the screen and we can switch this. So the biggest winner for today is ticker SMCI, Super Micro Computer Incorporated. Oh my gosh, they went up 24.54% today. Their previous close was $27.83, and they closed today at $34.66. Now let's do a hypothetical. If someone had invested, we're gonna use a bigger number today, let's say $5,000. If somebody had invested, somebody hit something. Thank you guys for tuning in. Hit that like button, I definitely would appreciate it. $5,000, we're going to put in a percentage for that. So it will be 24.54, hit the percent, converts it to the decimal for you, hit equal. They would have gained $1,227. That would have been their ROI on top of the $5,000 investment, which would have been the principal. So if we add the $5,000 back to it, it would have grown to a total, including the initial capital, of $6,227. All right. Now, when should I tell you this story? Ooh, it hurt my heart, to be honest with you. So let's go over here to analyze. SMCI is in the information technology sector. All right. And if you take me off the screen, and then I'll go ahead and tell you the story. The company profile, Super Micro Computer Incorporated. Here's their website. Links for the websites are down in the description for your convenience. I'm going to read a little bit of this description, and then I'll tell you the story. No, I'll tell you the story when we get to the charts, okay? It'll be better if I do it in the end. Super Micro Computer Incorporated, together with its subsidiaries, develops and sells server and storage solutions based on modular and open standard architecture in the United States, Asia, Europe, and internationally. Now, let's go to the website. We already at 12 o'clock. So here is their website. When I hold it, it'll take us there. Put the ticker back on the screen, put me back on the screen, so I'm not hiding. Thank you guys for tuning in. We got 5 people on YouTube. That's great. All right. Are we zoomed all the way in? Yeah, we at the 150. All right. So we're going to zoom. We're going to browse over the homepage so we can see what their goods and services are. Then we're going to go to company. We're going to go to careers, and we're going to go to investor relations. So everything we need is right here at the top, but we're going to browse over the company. Over the homepage. And I could tell you about this company because I did my due diligence on this company. So this company sells customized data setups, data servers to customers. Customized. This is all they do. So their competitors are big companies like Dell and things like that. And they use NVIDIA microchips. I'm drawing a blank right now. NVIDIA is crazy in the market with their, and I got it in my doggone computer. I can't think of it right now. Oh my gosh. I can't believe I'm drawing a blank like this. I can see it in my head, but I cannot think of the name of this doggone device that's in the computer. Can somebody help me? Please put it in the chat. What is it called? I'm gonna just pull it up. I can't believe I'm drawing a blank like this. Where is it? The driver is not a driver. It's not a driver. NVIDIA, NVIDIA. The graphics card. Goshly. The NVIDIA GeForce, they are graphics cards. They're processors and graphics cards. Now, I done closed the whole thing up, didn't I? I sure did. Man, I can't believe this. Now I was doing good. Now people start tuning in and I lose my mind, don't I? But they're graphics card, okay? They use NVIDIA's microchips in their processors. And the doggone, I'm going to say that story. So since they specialize in these servers, they can provide better turnaround time for their customers compared to a company like Dell that does a whole bunch of different stuff. This is all they do. So this is what gives them an edge in the space of data setups, the server setups. This gives them an edge because they focus on just making it exactly how you want to. Think of it like Burger King, have it your way. They set these servers up specifically to the specs that these companies want. Dell sells servers and stuff like that, but they don't just specialize in customizing it per customer, okay? That's what gives them the edge in that space. What makes them vulnerable is that this is all they do. But because AI is in such high demand, it's great that this is all they do, okay? So that's what goes on with SMCI, okay? Now, we talked about that. We got the company. Let's go to careers. You can't see it because I'm blocking it. Let's go to careers. Did not just skip over company. We didn't go to company. So company, about us. Let's see what we can find. Vision and mission statement. Did they zoom me out? I probably done lost them people sitting up there drawing a blank like I don't know what I'm talking about. Man, graphics card. I can't believe it. And I put computers together. I built the computer I'm using right now, and I could not think of graphics card. But they do have processors outside of that, but that's NVIDIA. They deal with NVIDIA. So company profile. Super Micro is a global technology leader committed to delivering first to market innovation for AI, cloud, storage, and 5G edge IT infrastructure. We are a rack scale total IT solutions provider that designs and builds an environmentally friendly, energy efficient range of servers, storage systems, and switches. Okay. And remember, I told you this is customized, top notch, top of the line. This all they do. So with AI being crazy like this, man, I was on it. And I'm gonna talk about what happened, my horror story of what happened with this company for me personally. So stick around. You're gonna want to hear it. All right. Am I by the mic? Yeah. So let's go to careers. All right, help drive future of Super Micro, accelerate your career, what our values are, what it means to work here. Links for the website are down in the description for your convenience. World-class culture and benefits. I'm looking for benefits. So it says that. I'm gonna browse over the whole page, see what we can find, and we'll come back to it, see if we can find the benefits. All right, learn more. Do they disclose the benefits? Yes. So they give some descriptions down here. I'm going to go over that. Man, thank you guys for sticking with me. I see it's 5 people in the room. I really appreciate you because I was like, oh, they going to leave while I'm trying to figure this out. Maybe it was entertaining and watch me struggle. But here are the benefits down here for what they do for the employees. I'm blocking it. So here you go. And remember, the links for the website are down in the description. You want to check that out. And for you, sticking around, I'm gonna hurry up and wrap this up. Here's the investor relations. I'm gonna bring that over because it opened up on a different screen, on a different monitor. So let me blow this up for you. Put me back on the screen so you can see me. And then I'm gonna put this back. All right. Blow that back up. That's good. Okay. So zoom this. We're good. So we're at the investors relations. And here's we're gonna scroll over this page real quick. That's that. Now, stock information, stock details. Here we go. Here's the stock quote. Here's the stock chart, blah, 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 blah. And those are the tools that they have. Okay. So let's go back to Thinkorswim and I can tell you my story. I didn't put the right thing on there, but anyway, here's that. Put me on the screen. All right. Now, guys, I was looking at this company. I was doing my due diligence. So we've been talking about consolidation. Here's what I saw on the charts. This right here, that is consolidation. Okay. So what I looked at when I was doing my technical analysis, I was looking for sleepers that would benefit from the AI boom we're having right now. I said, let me look through these different companies in the S&P 500 that are beat down, but they actually will benefit from what's going on with AI right now. That was my mindset. So I go back and I look at the 10-year weekly chart. I'm gonna walk you through my thought process of exactly what I did. When I went back and I looked at this 10-year chart, I saw that in the last, let me take me off the screen so you can see it. In the last 10 years, Super Micro was trading for 85 cents in 2018. That stock has shot up to $122.90. So then I zoomed in and I focused on this area right here. So as you can see right over here, they had consolidation in 2023. This isn't perfect, so let me remove it. I'll make it a little better. This is consolidation over here when I'm looking at the larger time frame. So for this period of time, somebody was building a large position, okay? They were building a position. So when a stock consolidates, it's going to break out one or two directions. It's either going to go up or it's going to go down. But it's going to break out one of those directions. And as you can see, after this 6-month period, that seems like it's about 6 months of consolidation, you can determine, is it accumulation or is it distribution? If the consolidation is accumulation, this means that smart money was buying it up. They was quietly just buying shares. And once they get their full position, it takes off. And that's exactly what you see here on this chart. They were building up a position quietly. So it ran up, it came back down to test this 200-week simple moving average I have on the chart. So I'm doing my due diligence. I'm looking at the technicals. So I saw that it was doing it again. Right over here. It was doing it again. I said, ooh, and they make specialized servers, because I had looked to see what they did. I looked to see who their competitors were, Dell, why they had the edge. I had did all that, right? So then I'm building up my position, but this stock just kept consolidating. It was driving me crazy because I'll be up, I'll be down, I'll be up, I'll be down. And over that period, I end up breaking one of my trading rules, which is don't use margin. So if you don't know what margin is when you borrow money to trade. And all that does is compound your losses if stuff go wrong, or it compounds your wins if it go right. That's horrible risk management, because you have to be prepared if something goes wrong. I got in my mind, there's no way that AI could be as hot as it is. And this stock then already fell all the way down from $122, which we looked at on the weekly chart, $122.90. And now it's trading for $33. That's a bargain compared to where it was at before. I'm sharing with you how I was thinking. So I'm loaded up, but I started using margin because I got impatient. And Lord and behold, right around this period right here, before you see this huge gap down, they came out with negative news that was some type of scandal of one of the insiders smuggling chips to China, breaking all types of laws and violations and all of that. And the stock lost 1/3 of its value overnight. It dropped from like it dropped from $31 down to like $19 or $20 overnight. And guys, I had to make a decision. It was hold on to those shares and possibly get knocked out forever, because I couldn't afford to take a loss any further than where it was, or just cut my losses and just move on. So I decided to cut my losses. That stock has recovered from, now listen, I didn't know it was going to recover. You have to focus. Well, I had to focus on what was happening at that time. I couldn't think about what could possibly happen if I held it. The right decision was to cut the loss. I should have cut it sooner, but I let that loss get too big. So since then, it's recovered. So after this had happened to me, I had found out that sometimes, now I know they had news, but sometimes after consolidation, the stock goes the wrong way before it goes the right way, because they know that if you do know what you're doing, you might take a position when they taking a position. And that's what happened to yours truly. So it's hurting me a little to see this go up without me, because if it had just took off where I was at, I'd probably be rich. But I ain't. I took a loss on this one, guy. I took an L. But we got to learn. We got to learn. So that reminded me, if I hadn't broke that rule, I would have been able to hold on to the position longer, and I would be in profit right now. So that's my story with this. So my technicals are already drawing on SMCI because we've covered them before. And plus, I was actually in a position with this company. So they gapped up on earnings. They announced earnings yesterday after the market closed. Here's the gap. So let me draw. We got a whole bunch of lines here. So let me draw the gap. Great show tonight. I enjoyed the review. Thanks, sis. I appreciate it. I put your comment on the screen. Thank you guys on YouTube that's been tuning in. So that's my sis. Give her some prayers and some love, because she wasn't feeling well today. I hope she feel better, because she got a lot of stuff she got to do tomorrow. Would appreciate it, guys. All right, let me put the ticker back on the screen. So here is the gap. Let me change this color. We're going to put it back on yellow. So there's the gap from yesterday's close. Yesterday's high. From yesterday's high to today's low. So there's no trading during the regular session in that space, so we can see where the gap is. So they call it a window, they call it a gap, et cetera, et cetera. So as far as resistance, I'm gonna put this here because I believe it's below that. So we're gonna use the top of that wick as resistance, and we can even make that a zone if we want to. We can use the top of this candle here, bring that over, use that line I drew. So this line, this is gonna be my resistance zone, and that's where the price action is right now, this candle. Let me zoom in. Let me zoom out. So it's trading below the 200-day simple moving average, and it's trading above the 9-day simple moving average. This dash green line is my 9, and this dash white is my 200, and we're on a daily chart. So those are days, 9 days and 200 days. Now I'm gonna zoom in, and we're gonna get the stock quote for SMCI, and we're gonna get ready to wrap up the show. So SMCI opened today at $31.44. They had a high of $34.71. They had a low of $31.12, and they closed today at $34.66, which was a trading range of $3.59. When we, oh my gosh, when we look at the trading volume, they traded 127 million shares of this stock today. Are you kidding me? Oh my gosh. So let's compare this to the average. Let's find out what the averages are, guys. So the average trading volume for this stock is 35 million shares in a trading session. 35. I got to pull the calculator up for this one. So right here where it says 127 million. So we're going to put 127 123 123 divided by the average. So the average is 35 million. 123 123. That's roughly 3.5 times average. The volume was nuts today. Nuts. And Tuesday, it was 55 million. 55 million. So volume definitely increased. It was above average on both days, Tuesday and today. Man, okay, so let's talk about the volume rank percentile. So out of the most recent 252 trading days, only 2 days had higher volume than today. So SMCI has been getting some attention when it comes to this volume. This gap down, I believe, was 100%. If you can, let me zoom in so you can see it. You see this shadowed bar? It's not a candle. This shadowed bar, that was 100%. That's one of the days that's higher than today's volume. You can see this is definitely lower than this one. That was on that gap down that caught me and put me in a bind and forced me to have to close my trade before I messed around and got a margin call. So let me draw this real quick so I'll show you this gap down area. So that's the gap down. I'm gonna make that yellow. So that'll be a new thing so y'all can see what these gap downs look like. So it's this yellow area. Okay, let me put this back down. I gotta take me off the screen because usually I have it right above this ticker label. I wanna make sure I get this right. There we go. All right, put me back on the screen and zoom out. Okay, guys, I think we covered everything with the volume. I didn't talk about this. So it's the volume rank percentile was 99.2%, which meant today's volume was higher than 99.2% of the 252 candles. All right, 252 trading sessions. Yes, which were also daily candles. Let's go. Let's go to the main screen. All right, let's wrap it up. Listen. You already know. I hope that you learned something, and I hope that you earned something. Thank you guys so much for joining me tonight. I really appreciate it. It started off kind of rough. We've been consistently putting out these live streams. It looked like we had some new people join the stream tonight, even though they were quiet. I appreciate you for being here because YouTube is finally putting my content on the homepage. So the algorithm liking something about your mans. So I'm grateful. I think it just made me a little nervous tonight because I'm like, oh my gosh, YouTube put me on the homepage. So it was a lot of pressure just thinking that I would have new people and I didn't want to lose them tonight. So I just wanted to tell you that was where some of my nervousness came from. But I've done 2 interviews with up-and-coming content creator Tiara Owens showing how I got started investing in the stock market, my profits, my losses, and a link to that playlist of interviews are down in the description. And make sure you tune in weekdays following a market trading session at 11 p.m. Eastern time. Take care and God bless.